What are we expecting from the Fed then this week? Or what do we think markets are going to be focused on? Because clearly it's the 25 versus 50 decision. But then there's the summary of economic projections, an update. We haven't had one in a while on the dot plot. And a lot of people are going to be looking for what clues the dot plot has in there to sit alongside the action that the Fed actually takes.
That's right, Anna. The market will no doubt be most attuned to whether the Fed starts with a 50 basis point cut or just a 25 basis point cut. But it is also this idea of what a Fed policymaker is going to tell us about their plans for action for the rest of the year. Economists are thinking 25, 25, 25 based on our survey on average. And a lot of them are saying if they start with 25, they're not going to be factoring in more steep cuts later in the year based on the dot plot. On the other hand, you know, if they start with a 50, then how much more aggressive could the cutting be for the rest of the year? That might also show up. What is clear is we're at the start of this cutting cycle, and that is already getting markets pretty excited. And although last week it looked like we were moving away from a 50 basis point cut, that really has come back into pricing in quite a significant way over the last couple of sessions.
Paul, let's talk about cuts elsewhere in the world and actually talk about what is happening in China. The data over the weekend, once again, very disappointing. Should we be expecting something significant from the Chinese authorities, or is this just about delivering something that's okay, acceptable, and in line with targets?
I think that as far as officials are concerned, they're quite happy to get towards that 5% growth target. That's the goal. They don't want to go a lot harder. It doesn't seem like there's going to be any big bang kind of measures. On the other hand, we had this rare statement from the PBOC accompanying credit data on Friday night talking about the idea that they want to stave off deflation, that they want to take a little bit more action, and promising some stuff to come down the line. Now, we've already had some exclusive reporting on the idea of these mortgage rate cuts coming through a little bit earlier than they otherwise would, and we can expect incremental measures like that. The stock market is getting a little bit of support from that, but probably a big bang kind of a move isn't something that the market is expecting at all.
Can I talk about FX markets then, Paul? We've got dollar yen back with a 139 handle once again this morning. 139.74 is where it trades right now. A substantial move higher then in the yen this morning as we wait for the Fed and wait for the BOJ. I know we've got thin liquidity perhaps in Asia because a lot of markets are closed. How much are we reading into this move? I think if the Fed is going to cut aggressively, then the dollar is going to go down and the yen is going to be one of the biggest beneficiaries of that, given that the BOJ is continuing to hike. And it's maybe an underpriced risk of what we're going to hear from the BOJ this week. Remember, their meeting as well, kind of overshadowed by everything else that's going on. But if they do cough and splutter and give the idea that they might hike earlier in the year than the December that most people are expecting, that could give the yen another lift forwards.